So good day, Ma'am Arib. I'm Jose Del Villar Albano. I'm the leader of our group. I'm together with Julia Mirhan, Ziana Yong, Matthew Kibado, and Samantha Tamayosa. And for today's video, I will be alone as they're also assigned for other tasks such as the reporting. So in this video, I will be discussing the different types of sales budget for the master budget that we've accomplished as a group for Dahon Republic. So at the end of this, I will be presenting the cumulative statements, which are the budgeted income statement and the budgeted balance sheet. So let's begin with the sales budget. So for sales budget, which was made by Mr. Kibado, our budgeted sales per quarter in units is 254 units in quarter one, 204 units for quarter two, and 182 units for quarter three, and 140 units for quarter four. And this one and quarter one of the following year is 438 units. So the selling price per unit, as agreed, is 2,500 pesos. So if we simply multiply the number of units per quarter by the selling price, then you will get the total per quarter as seen in the table with 635,000 pesos, 510,000 pesos, and 455,000 pesos for third quarter, and 350,000 pesos for the fourth quarter, with a total sales budget of 1,950,000 pesos. So that's all you have to know for the sales budget. And the figures, if I may have missed to state some, are in this Google Sheets. And next, we proceed to the expected cash collection. So for the expected cash collection, we're given some additional information first. So it is important to know that all sales are on account, which means that we utilize the accrual basis. And the collection pattern of Down Republic is 80% collected in the quarter of the sale transaction and 20% collected in the quarter following the sale transaction. So the accounts receivable as well for the last quarter of the previous year amounted to 164,000 pesos, which will be collected in full. So as seen in the expected cash collection budget, I won't dwell that much here. But the important thing here is that there's a total of 2,044,000 pesos for the 4 quarters of the year. And the accounts receivable at the end of the quarter is 350,000 times 20%, which yields 70,000 pesos. And consequently, 280,000 pesos, as you can see in the fourth quarter. So for the next budget, we will be talking about the purchases budget. So for the purchases budget, there's some additional information here that we have to take into account. First one is Down Republic intends to have an inventory of 15% of the following quarter's budgeted sales in units. And secondly, we have an ending inventory of the previous year of 33 units. And a note, in the sales budget, there's an additional information about the budgeted sales in units for the quarter one of the following year, which is 138 units. To confirm that, let's go back to the sales budget. So sales budget here is 138 units, as you can see in my cursor, which is the quarter one of the following year. So let's go back to the purchase budget. So the figures for the purchases budget are there. So taking into account the additional information I have just stated, and having a total for the year of 767 units as a required purchase. So to compute for the desired inventory, the computation is shown below, which is 4 for the beginning budgeted sales units for the second quarter multiplied by 15%. And quarter three, we have 182 budgeted sales units multiplied by 15%, and so on and so forth. So the important thing here is that we have a 767 unit required purchases according to our purchases budget. Now let's proceed to the inventory budget. So for the inventory budget, we have the purchasing budgets for the plants as seen in the figure. So for the first quarter, we have a total plans to be purchased of 247 units. For the second quarter, 198 units. Third quarter, 172 units. And the fourth quarter, 146 units in total, which equates to 763 units. So to support the figure, we have some additional information here. So first is that Dahon Republic intends to have an ending inventory of 10% of the following quarter's purchase requirements. As though that explains the compensation above for the desired ending inventory. And next year's first quarter production is 200. And since the direct material is the plants itself, since we are a merchandising and service company, the required units for production is simply taken directly on a per unit basis. So that's for the inventory budget we have here as a merchandising company. And next, let's talk about the expected cash disbursements for plants. So to compute for that, we simply look at first the explaining and supporting information. So Down Republic pays 800 pesos for the plants. That's an assumption that we've made. And 80% of the month's purchases are paid in the month of purchase. Not assumption, sorry, an estimation. And the remainder is paid in the month following the month of purchase. And the accounts payable beginning balance is 70,000 pesos. Now we simply make a figure here and we get a total of 657,003 pesos point 20 centavos as our expected cash disbursements for our plants. So this leaves an accounts payable balance of December 31 of 23,316 pesos point 80 centavos. And to compute the cost of disbursements here, we we simply multiply the total plants to be purchased per quarter, as seen in the previous budget, and we multiply that by the cost per plant as an estimation of 800 pesos. So we get the cost of disbursements here, which is reflected in our expected cash disbursements on the top table over here. Okay, so now that we're done with that, let's proceed to the overhead schedule. And the overhead budget is simply our overhead budget for uh, the cancel segment of our business. So that's car depreciation, salaries expense, and our utilities. And then we have a total overhead budget of 63,000 pesos. And take note here that we also the non-cash costs, which is the depreciation. So we can get for the total cash disbursement for the overhead, which is 60,000 pesos all in all. Now, for some supporting information, the depreciation is for the plant rack with 15,000 cost and a useful life of 5 years. So that's 750 pesos per quarter. And next, we also have the utility, which is the cost incurred for the water and electricity expenses. And that's an estimate of 2,000 pesos per month. And the salary, at last, is for the helper or the worker of the garden who will be paid 3,000 pesos monthly and is 9,000 per quarter. And for the ending inventory budget is simply computed by multiplying the ending inventory estimation of 20 units multiplied by 957.50, which is the cost of a product cost per unit in our business, which yields a total cost of ending inventory of 19,150 pesos. And to compute for the 957.50 product cost per unit, we simply add the direct materials 800 pesos as mentioned in the previous budget, and the overhead of 63,000 pesos divided by the total estimated number of plants for the year, which is 400 plants, and we get 157.50 pesos, which yields a total cost per unit of 957 pesos point 50 centavos. Now let's go to the selling and administrative expenses budget. So for some additional information first, we have to take account that Down Republic, the variable selling and admin expenses are 100 pesos per unit sold. And the fixed selling and administrative expenses are 8,000 per month. And the fixed selling and administrative expenses include 2,000 pesos in cost, which are primarily depreciation that are not cash outflows. So refer to the figure here, and you will have an total cash selling and administrative expense budget of 102,000 pesos. This is inclusive of the deduction of the non-cash expenses. And lastly, before we can proceed to the budgeted income statements and balance sheets, we discuss the cash budget. And before we discuss the cash budget, let's take into account some additional information. So first, we have the cash budget maintains a minimum cash balance of 20,000 pesos with a maximum of 50,000 pesos. And excess cash will be used to buy marketable securities for investments and purchases of 150,000 equipment in the first quarter, 75,000 in the second quarter, and 50,000 in the third quarter are both purchases and paid in cash. And it also has the cash budget has a cash beginning balance of 10,000 pesos. So that's in the first quarter. The tax has 240,000 pesos due in the second quarter, which we can reflect here later at the bottom. And the partner's profit share of 20,000 pesos is paid each quarter, and a total of five partners, which equates to the total number of members in our group. And the marketable securities are sold before borrowing funds in case of a cash shortfall, which is less than 20,000 pesos. So in cash of financing, entity borrows on the first day of the month and repays loans on the last day of the month. Now to reflect that here, we can see that the beginning cash balance at the first quarter is 10,000 pesos, and the tax expense here in the second quarter is 240,000 pesos. And here we have the respective equipment purchases as mentioned in the additional information over there. And these are all paid in cash as mentioned. And yeah, that's about it. So after the total cash available, we first compute the cash available. So we have here the cash available as seen above, which equates to a total of 2,054,000 pesos. Now, after we deduct the cash disbursements based on the previous budgets, we then get an excess and deficiency excess of 157,603.20 on the first quarter, a deficiency of 37,747.20 pesos on the second quarter, and 154,944 pesos excess on the third quarter, and a 165,106.80 pesos excess on the fourth quarter, thus having a net excess of 319,996.80 pesos. Now, since we don't have any transactions on the financing aspects of the cash budget, we shall now proceed with the ending cash balance of 50,000 as desired on the cash budget, 20,000 on the second quarter, third quarter 50,000, and fourth quarter 50,000. So, and a total of 50,000, the total 50,000 ending cash balance based on the table. Sorry. And then we have here also the marketable securities. As mentioned at the beginning, we have marketable securities are sold before borrowing funds in a case of a cash shortfall, and that excess cash will be used to buy marketable securities. So as we can see here, these are the given marketable securities here, and the red one here signifies that this marketable securities has already been sold. So we are left with a total net marketable securities of 269,996.80 pesos. And lastly, we've arrived at the highlight of the event, as one might say, which is the budgeted income statement and the budgeted balance sheet. Now, for the budgeted income statement, we simply solve for the sales of 1,950,000 pesos, which is sold by multiplying the 780 units multiplied by selling price of 2,500, and the cost of goods sold, which is 780 units multiplied by the product cost per unit of 957.50 as computed in the previous budgets. And then we yield 746,850 pesos cost of goods sold. And then we get a gross profit of 1,203,150 pesos. And we deduct the selling and administrative expenses of 102,000 pesos based on the budget on selling and administrative expense. And we get a net operating income 1,101,150 pesos. And thus we yield a tax expense of 240,000 pesos. And finally, to get the net income, we deduct that a tax expense to the net operating income, and then we get 861,150 pesos as our net income. for the year. And then lastly, we have the budgeted balance sheet. And the budgeted balance sheet, before we delve into the balance sheet itself, let's first take into account some additional information. So first, the Dahon Republic reported the following account balances prior to preparing its budgeted financial statements. So first, you have to remember that the equipment has a beginning balance of 20,000 pesos, and other information such as a partner's capital, which it has the beginning cap balance of 40,236 pesos as recorded in the previous year. And we also have a partner's profit share of 20,000 pesos, which is paid each quarter in 4 quarters. And lastly, we have net income, which is equally divided among the partners, and those are 5 partners. So we have here the budgeted balance sheet. We have cash, marketable securities, accounts receivable, inventory, and equipment. And we have a T account presented here. As mentioned in the additional information, we started off with 20,000 pesos equipment beginning, and then we add the purchases within the 3 quarters, which are 150,000 pesos, 75,000 pesos, and 50,000 pesos respectively, to get the ending equipment of 295,000 pesos here. And we also have here the accumulated depreciation, and we deduct, and to get the net book value, we simply deduct the equipment with the accumulated depreciation. And then we yield a total assets of 696,146.80 pesos. Now that's for the assets part of the balance sheet. Now we focus on the liability and partners equity part of the balance sheet, since we consider this as a partnership. So we have here an accounts payable of 23,316.80 pesos. And each partner has an outstanding capital of 134,566 pesos, to get a total liability and partners equity of 696,146.80 pesos. Now to get the 134,566,000 outstanding capital, a T account is shown here. So as you can see, there has been a withdrawal here of 80,000 pesos, and there has been a withdrawal here of 80,000 pesos, and then we started off with 42,336 pesos as our partnership capital from last year, and then we have 172,230 as our net income. Let's confirm that. Yeah, 861,150 divided by 5 members, and we yield 172,000 to 230 pesos, which is our net income, and it's added to our capital accounts. So we yield a 134,566 pesos outstanding capital each partner. So I guess that's all for today, and I have discussed to you the multiple budgets as required to get and to reach the budgeted balance sheet and the budgeted income statement. And the budget, as we made this activity, we found that it was really helpful in the real world sense and perspective to prepare such budgets in order to arrive at budgeted balance sheet and budgeted income statement. These budgets allow us and help us uh, to use our best estimates and based on previous forecasts and future forecasts and patterns in our company and operations to really assess the best values to have a planned and flexible budget for our company. So thank you for watching.